It's Monday and you're watching FreightWaves Now. I'm your host and lead economist, Anthony Smith, and coming up, I'm going to give you a shipper econ update, but first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday Carrier Update presented by PowerFleet. I'm Zach Strickland. Hopefully everybody had a long and restful holiday period as we look at our outbound tender rejection index to start the week. Now, tender rejections typically come down a little bit after holiday periods because drivers come back online. We see lead times pushing later into the week, after Thanksgiving for sure, to see, a little bit more compliance because we're having more availability back into the market. Well, tender rejection rates remain elevated throughout the holiday period. We've been above 28% now for the last several days, almost over a week now, and it continues to push. So we don't really expect to see capacity loosen by any means coming out of the holidays with any significance. But we do expect it to come down a little bit as we do have a little bit more availability coming around. Now, how much that's going to matter to the shippers out there? Probably not a lot. We're still going to see elevated spot rates more than likely throughout the holiday season as we see these, demand is still relatively high right now. We're looking at our outbound tender volume index. Now, normally we see these troughs around these holiday periods in our outbound tender volume index. That has to do with the fact that it is a 7-day rolling average. So one day of unnaturally low volume through the week makes it look like it's a lot lower than it is. Well, if you look over there at Thanksgiving, we see we've double dipped almost. We see that we've gone lower than Labor Day back here that happened in the first part of September. You might be thinking, okay, well, we're starting to see demand kind of come back. No, not necessarily. We had 2 lower than average days last week. So that's going to keep the outbound tender volume index pretty low throughout the rest of the week. It'll come back up here probably next Monday or so when we're giving our Monday carrier update. So tender volumes still very high. Nothing to be concerned about here. Demand is still elevated. We see that push of tenders right before the holiday. That has to do with the fact that we see a lot of volume being pushed before the holiday, getting in front of this week. So we should still see quite a bit of demand and freight moving through the United States as we speak, especially as people come back into the office and start pushing orders. So where in the United States can we expect to see some of the most significant changes week over week? Well, we look across our weighted rejection index map here to see combination of weighted rejection or tender rejection weekly change and outbound tender market share value. So the larger markets in the country are going to have an increased value with the weighted rejection index when they do have any changes in their tender rejection rates week over week. Looking at the map, you can see up there in the Northeast, we've got Harrisburg and Elizabeth, New Jersey, topping the country with the highest weighted rejection index values right now. That means that they had a significant increase combined with volume out of those markets. Now, these are short haul markets, and a lot of carriers tend to avoid these areas, but we do expect this area to be one of the hottest markets or hottest regions in the country, especially as we get closer to the holiday season. Looking down there in Atlanta, Georgia, we'll dive a little deeper into Atlanta. Atlanta showing dark red there, negative 9.9, almost a negative 10 value. We do like to say anything below about a negative 5 on the weighted rejection index or higher than a 5 on the weighted rejection index is a significant movement. Statistically speaking, does not happen that often, although 2020 has proven that to be a little bit of not necessarily as anomalous as we used to think it was. So outbound tender market share and the orange there showing you Atlanta at 3.997. So almost 4% of the total outbound loads in the United States coming out of Atlanta right now. Then we've got our outbound tender rejection change. And you can see there, I've got a little line showing you tender rejection rates over the last 7 days coming down 8.8% or 2.51 percentage points overall. So that means that is what's driving that weighted rejection index down. But 25.87% is still a very high amount of tender rejection rates. We can see both reefer and van outbound tender rejection rates for this market are also in decline, so it's not necessarily modal specific by any means. Capacity is starting to come back online, still very high, however. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm the lead economist here, Anthony Smith, and today we're going to go over some new orders and new homes data. So let's just jump into it. Behind me, I have non-defense capital goods new orders. Here in the blue line and in the green line, I have flatbed outbound tender rejections. So just a quick review. When we're looking at non-defense capital goods new orders, excluding aircraft, it's a mouthful. But what it means is essentially it's a barometer for business-to-business activity. So usually when we see these non-defense capital goods new orders, excluding aircrafts moving up, it's usually indicating that business activity is increasing and that these new orders are going to lead to production, which is going to lead to shipments. So as you can see, this has some implications for freight movement, specifically flatbed outbound tender rejections index. So as we see increasing for non-defense capital goods new orders, we can expect to see some tightening capacity for flatbed outbound tender rejections, what we have here in the green line. And what we have for overall non-defense capital goods new orders is that there was an increase over the last month, but there is some slowing in the pace of rise. So there is a bit of a sluggishness, or not so much sluggishness, but there is a slowing in the pace of rise. So there is some decelerating growth going into the fourth quarter, kind of indicating that there's likely going to be some declining trends going into the fourth quarter overall when we're looking at the manufacturing side. But there is still some positivity overall, back kind of in line with expectations. When we looked at previous weeks, when we looked at the ISM PMI, we look at the previous industrial production number, these kind of exceeded some of my expectations for overall manufacturing, but we can see that this is starting to slow back down into expectation. So this is going to be a key area to kind of pay attention to when we're looking at flatbed outbound tender rejection index or flatbed capacity overall. The other thing that's really going to impact flatbed capacity is going to be the housing and construction sector. So we're looking at single-family housing starts in conjunction with permits. We're seeing that these are really moving on a very high rate on a year-over-year basis. One of the key areas that just got released were single-family new home sales, and what that showed was nearly 40 or over 40% on a year-over-year basis growth for single-family new home sales. So we're looking at single-family new home sales. That's an area that's really exceeding and really providing a lot of upward momentum in the economy. So what I have in the green line here is permits. And so permits are going to be similar to that new orders sector that we just talked to about manufacturing. These are essentially permits for new homes being built within the economy. And so these permits showing some upward movement indicates that there's going to be some upward momentum for some of these housing starts that are kind of coming online and new home sales. New home sales are really going to be impacted by the lack of the lack of inventory that's on the market right now, which is leading home builders to have a lot of positive sentiment overall when we're looking at the overall housing market. So there's a lot of momentum behind the housing market and really outpacing a lot of other sectors within the economy. And really when we look at the overall economy, it's going to be kind of the tale of two consumers, especially as we get throughout the fourth quarter. What I have behind me here is the weekly initial jobs claims. And what we saw in the initial jobs claims was that there were 2 consecutive weeks of increases for jobs claims. This has been a measure that has made stubbornly high. And what we see in the jobs claims number is that it tipped up to a 5-week high. So this is definitely going to be a tale of two consumers. One side of the economy that's flourishing, working remotely, while another side of the economy of consumers that are kind of struggling to find work. So this is going to be definitely a hot area to watch, especially as we get closer to Christmas time. So that's going to do it for this Econ Shipper Update, but thank you so much for tuning in, and we'll see you on the next episode.